All right, shall we kick off, Josh?
Let's do it.
Cool. Hello out there. Hope everybody's doing good today. Welcome to another C4 live stream. We have a very exciting session today. We're going to get to the fundamentals of what makes Ethereum so powerful and really so unique in terms of its functionality, especially with respect to how it differs with Bitcoin. So quick history lesson. You guys are probably familiar with Bitcoin. Bitcoin is very good at really one thing, giving people the ability to send Bitcoin back and forth to each other in a trustless fashion. So this has proven to be an incredibly powerful use case, as seen by the growing number of people around the world that use Bitcoin and the amount of money in that system. However, back in about 2013, there was a sense that maybe more could be done with blockchain technology. Enter Ethereum. So the core of Ethereum and what makes it so unique is smart contracts. This might be a term you've heard once or twice or many times, but you're still confused about it. So if you're confused, no worries, we're here to fix it. We being the C4 committee, my name is Kent Barton. I'm a member of the Certified Ethereum Professional Committee alongside many of my cohorts today. So let's do some quick intros before we get in. Dustin, do you want to kick us off?
Sure, my name's Dustin. I'm based out of Singapore, and just looking forward to having the good discussion.
Mr. Cheyenne.
Thanks, Kent. I'm Cheyenne. I'm the chair committee of CEP and working with C4 for a while. On the side, I work with on staking, Bitcoin ATMs back in the day before Ethereum was a thing, said no to Ethereum ICO. And I came back and I'm working on a smart contract auditing and some other record. Right now, I'm educating a lot in like Farsi, English, and here we try to attack each of the subjects in each of these sessions. Josh, you want to go?
Sure. Josh McDougall, one of the founding members of C4 and been on the Certified Ethereum Professional Committee since its inception as well. And currently I get to make video games using this technology.
I've seen previews of these video games and they're amazing. So I'm excited to see this go public. Again, my name is Kent. I'm an ETH Denver steward. I actually co-wrote alongside our fearless leader, Jessica Levesque, the CEP guide, which you can find on our website. And I'm currently the tokenomics workstream leader at Shapeshift DAO. When I was at Centralized Shapeshift, I had the incredible honor of meeting somebody who would become one of my dearest friends, Danielle Wall Elliott, who is also our special guest today. Danielle, how's it going?
Hi, everyone. Nice to see you. So happy to be here. Yes. Know a few of you guys from our Shapeshift days, and then you can't get rid of me once you're in my crew.
Danielle's here to talk about smart contracts today from the context of what does this stuff actually look like in terms of real world usage, and particularly with respect to the use case that she's working on right now around decentralized insurance at names. So we'll get into that shortly.
First of all, introduction now.
What's that?
Should I give my introduction too?
Yeah, let's hear all about names. Awesome idea.
Well, so I went down the crypto rabbit hole in 2014, and then I started working at Shapeshift as their 12th employee in 2016. I was there about 6 years until it turned into a DAO. I wrote the first proposals for the DAO. I helped establish the treasury management committee. So that's mostly what I did, operations, making sure to, know where all the $100 million of crypto was at all times, and just make sure that all those exchanges were happening as we wanted them to. And then, after the DAO kicked off, I had the opportunity to join the Names team. So I'm the current COO at Names. We are building an insurance marketplace on chain. And so what that means is we're matching the insurance demand. So what does insurance need? They need capacity. So they need capital to be able to go out and write these insurance programs. And they're of all varying collateralizations. So something like a Catastrophe insurance, that is going to be fully collateralized because there is the possibility that all of those policies trigger because of something like a hurricane or a wildfire, versus like travel insurance, auto insurance, we can have them not be as collateralized. So the supply side of the marketplace is crypto capital providers. So they can come in, participate in these different programs. They get out a token that represents their proportionality ownership in that cell. The insurer can go out and write the policies. So everything from policy inception, premium payments, claims, it's all on chain and all on our smart contracts that we've built.
So it's no exaggeration to say that this level of complexity would essentially be impossible on Bitcoin. You need something more functional, and namely, you need smart contracts.
Yeah. And, our competitor in the real world, well, I shouldn't say real world, the traditional world, is Lloyd's of London. And, they're doing it all in a very manual way. So many employees, they're still, trading paper slips sometimes. This is a 300+ year old industry that we're competing with. So just the fact that we can have more efficiencies, super clear rules in place that automatically execute. We know exactly what percentages all the participants are going to take. It just makes it so much more efficient. And yeah, a complex thing, but made easier.
And trustless and permissionless and all these wonderful attributes. So I'm really excited to see exactly what you guys are doing, how you're leveraging this tech. First of all, let's kind of pull back a little bit and just zoom out and start with a very fundamental question. What is a smart contract in this context? Who wants to jump on that one?
I can try. Like, there was this example we were using like early on about a vending machine. So like, just a step back, smart contracts are not necessarily smart, but compared to legal contracts, they are really smart because they can do things. And one of the examples is like using a vending machine. Like, imagine a vending machine, there's a program there, you put the cash in, you need a specific amount of cash, you get an item out. So this, compared to like a mechanical machine, is smart, but compared to a computer, even a calculator, is not. So like, smart contracts are in the between there. The reason they were called smart contract is like in 90s, that was like called that, and kind of kept the name. It's because they can do more than just a contract. They can do a lot more other things. And we can do these thing now because of the infrastructure we have. As Kent was saying, we had Bitcoin. We tried doing like smart contract in Bitcoin with Omni protocol, colored coins, like other things, but it was like just not working properly. And then we entered Ethereum world and like smart contract machine and EVM, which we were able to do this. So that was my attempt of saying what smart contracts are in the definition. But if anyone wants to jump in more of the technical side, go for it.
Yeah, Mr. Dustin, would you mind providing a little bit, just a little bit more technical structure around that? Like, how exactly do these differ from, say, maybe, for example, if you've ever had a MetaMask account and you sent maybe some ETH back and forth with a friend or a stable coin, that kind of feels like pretty similar to Bitcoin. How are these smart contracts really differing from normal ETH addresses and kind of the fundamental basic type of use case that everybody's used to with like Bitcoin?
I think what you described basically was transfers, right? If you're just transferring Ethereum from one wallet address to another, then that's a very basic transfer. But with smart contracts, you can do a lot more because you've got a much more expressive language behind it. So what that allows you to do is that you can then do swaps. You can, like, for example, vote on DAO proposals. You can then start doing things like options. Basically, a lot of things that already exist in TradFi are already starting to be ported over. And then you've got even more interesting things that maybe aren't common in TradFi, where you can do stuff like AMMs, you have liquidity pools, which, in traditional markets, those are done with market makers. But then you've got things like flash loans and lots of new expressive things that are fairly unique because you now have this language that can execute everything.
Yeah, it's a testament to how cool this stuff is that, like something like flash loans, even 5 years ago, but like, whoa, that is sci-fi. It still kind of feels like sci-fi. It's really powerful stuff.
Yeah, I mean, at its core, though, it's a really simple concept. I mean, we use applications all day, every day. Our phone has many applications. You know, this Zoom link is an application of itself. These are all just different programs that we're using, and smart contracts are just little programs. The kind of interesting part about it is we all get to run the exact same program together. It's almost like a shared calculator in a way. If I was like, okay, well, I'm going to do 1 + 1 today, and then, you know, Danielle and everyone else on the call sees that result take place. It's not necessarily efficient, but we can all verify that 1 + 1 = 2. We all get to see those results. So it's just a little program, but instead of, you know, running it here on my computer, we're all running it together in this magical thing that we call the EVM, which is what actually runs this code on the Ethereum network.
Yeah, if I was gonna tell my mom, I would just say, you know, it's like programmable money. So when you said the programs, I was like, yes, exactly. That's the quick definition I would try to give her.
There's one other attribute that follows from that is all this code is open source and it's viewable for everybody to see on the blockchain. One really powerful aspect of that is not only is everybody running it, so you can sort of trust that because of that, nobody's going to come in and sort of insert some other code suddenly, but everybody can actually view the code themselves. And of course, you know, that might be difficult for your everyday user, but people who are good at reading these smart contracts can look at the code and verify that it actually will do what it says it'll do. So if I create a smart contract that says, hey, send me money, I'm going to send it on to Josh, you can actually verify that. And instead of me saying I'm going to, you know, it's going to bounce to some other address. So just one of the powerful aspects of blockchains giving rise to new abilities here. I just want to
add something to what you just mentioned as like the code being open source. This was like, I did a paper on psychology of blockchain, or the trustlessness, that we came up with this idea, or we kind of narrated that in that paper, that these are contracts, and similar to when you have a legal contract, you usually consult a lawyer to like look at the contract, or most cases you don't do that till there's a dispute, which is like not necessarily the best way. But you need like an expert of that field to look at your contract to see you're protected, you're that. So similar to this, the code is open source, but you still need like an expert to look at the code and verify that that code does what it's supposed to do. Because like just having the code is there not necessarily is meaningful for everyone. But there is a big difference. The big difference is a lawyer might say okay to a contract, but then when the dispute happens, you lose your case because of some clause there. But in here, everything that is coded there, that's what happens. Like we don't want to get to the upgradability part, but like everything that you see on the code and smart contract, that's what happens. And when you interact with it, you should expect the exact same line of code being executed. So there is a bit difference, but it's really similar that you need that expert.
There's another aspect of the open source aspect of it that's very interesting, which is if the programmers of the original contract make a change to it, they ask everyone to switch to the new contract. But if the new contract introduces things that the users are not happy with, because it's open source, they can fork the old code and continue using the old code if the programmers actually do something that they don't want. And this is something you can't actually do with centralized platforms, where you use the code, it's closed source, you might not be able to duplicate it and change the rules back to the way you wanted them to be.
Yeah, well said, Dustin. Great point. Just going back really quickly to what Cheyenne was saying, and this is a very important distinction that I think a lot of people get sort of confused about. The term smart contracts sort of has connotations of the legal world, where, you know, we're very familiar with all sorts of contracts in just regular life, and in the business world. Smart contracts have absolutely no direct nexus or tie-in with the legal world. So we use this term to describe, you know, this code that's running on blockchains. The term itself, I think, even predates Ethereum, but crucially, there is no direct tie-in with the legal world. That's going to be an interesting challenge moving forward, is sort of like how do actual contracts and legal systems work with and interface and respect this code. Danielle, I imagine you guys have, you guys touch on that somewhat, but kind of bringing it back to some specific use cases, namely names. At a high level, how are you guys at Names kind of really using smart contracts? What is it about smart contracts that allow you to do what you're trying to do?
So let's say we've set up a segregated account. This is both a legal term and a term for us to know that, okay, this one insurance program can run here, while a lot can also run in parallel, and they don't affect each other if, one has a lot of losses. So we can set up a segregated account, and each of these segregated accounts, we have different parties that are named. So, and they're named by their Ethereum address. So the insured party, is named on there. We're expecting that premium payment to come in from that address. And if there was a claim that needed to happen, we would know to pay, that address. So one, it's just definitely using it for like identification of all the counterparties involved, in an insurance program. Another way that we're using it in the insurance world, the premium payments are what give returns to those capital providers. And in the traditional world, this is mostly limited to like pensions and hedge funds who put up the capital to earn that return. And so for us, we can take that premium payment in, and immediately before it goes into a centralized, wallet or account, where we then have to do accounting and say, okay, this person gets this for an expense, the broker gets a percentage, names gets a percentage. That all happens right away. So the premium payment comes in, everybody gets, their cut allocated to their addresses that have been named on chain. And then that tokenization piece is another key element for us. You hear a lot about different tokens or, ERC20s, things like that. Our tokens are limited to only being able to be used and traded in the names ecosystem on our smart contracts. So it's a way for us to, like I said, like right now, the capital is provided by pensions, hedge funds, like very, more like the large fat cat investors. And so what we're able to do, we're still fully regulated. So you need to be an accredited investor. You need to pass KYC. But if you can do that, you can connect your wallet and participate in these insurance vehicles. We call it insurance as an asset class. And so by tokenizing those positions, we also make it a liquid market, which right now it's pretty illiquid. Like you kind of have to go in and you're committed to say, sometimes it could be up to 24 months. It could be a 3-year program. So this really does give opportunity for money to come in and out. And yeah, just that trusted system that exactly who can access it, who can withdraw it. In the traditional world, that is all held in a bank account, and then they go put that money to work, and then they make money on your money. So, it really is an opportunity to have provable, trusted funds. They are there for the claims, and everyone that's involved is named upfront.
This is an incredibly powerful use case. So, it's no small thing to say, hey, we're going to disrupt a 300-year-old industry with names like, Lloyd's of London. But thanks to the power of, for example, being able to tokenize these things in a trustless fashion and creating liquidity around them, it's remarkable. It also kind of like speaks to the idea that tokenization is a lot more powerful than simply these, like meme tokens.
Exactly.
There might be Peppy token out there. Yes, that's cool. And there's different use cases, but tokens get really deep and really powerful. And this is a perfect example.
Yeah.
Danielle, can I ask, are there other things that, the composability of DeFi that has enabled use cases or usage of the tokens that you can't actually normally do in TradFi?
I mean, definitely the tradability, that's our number one piece. We're looking at adding or seeing how we might be able to interact with other yield-bearing protocols to put that money to work for the actual token holders so that they can get even more returns. We're looking to even see like how could that collateral be used potentially in other ways. But yeah, right now we've just launched in May. We have our first 2 proof of concepts. We've got about 4 or 5 more segregated accounts, like different insurance programs coming live. They range in their returns from 10 to 20%. And, we're looking to start building on top of it more and more. But, we got launched, we went from 0 to 1, and now we'll see what else we can plug into in the DeFi world. The other thing I'll mention is, these traditional lines of business and insurance, they don't have as much trouble getting capacity. They don't have as much trouble going to somewhere like Lloyd's of London because they have, more money. They could pay the $1 million. They could pay whatever they need to. Something that's like a DeFi insurer, InsureAce is one of our partners, and I love them so much. They've really proven that it works. They paid out almost $12 million in insurance claims after the Terra Luna DPEG. And so what our marketplace will hopefully enable, one is just the mass adoption of crypto, but two, allowing for more access to insurance policies, to any kind of like, there's one that's for bridging insurance, smart contract hacks, there's kind of more the traditional, like just your custodian gets hacked. So that I think too is just helping us being able to contribute to building the ecosystem, making it a safer and mature place.
I'm really curious where, and if we're talking about smart contracts, it's fascinating to know, where do they end? If you don't know what they can't do, then it's hard to understand what they can do.
Yeah.
Now, in the insurance process, clearly someone's coming up with a claim and validating that claim. I'm going to go out on a limb and say there's not a smart contract that's like validating claims, and the squishy humans get involved at some point. That's
right. You're spot on. And, I think that is maybe a misconception about smart contracts, especially with having that word smart in there. People maybe expect them to be a little smarter than they are. But you need to tell it everything that you want it to do ahead of time. So I can't tell you how to process the claims before, anything has happened. So, we have a named claims handler on each of the policies, and then they, get notified when a claim happens. There's an on-chain element for sure, but a lot of the decision-making processes is off-chain. We are seeing in the insurtech space, there are some advancements in like AI claims handling. So I think there is a future where you could have, especially like if we said like the bridging insurance or like something that could be actually verifiable on-chain, you could go and like point to an oracle or something. But still, your smart contract isn't going to be smart enough to handle it up front. You're going to kind of have to outsource and get data, get information from, a squishy human, or potentially in the future, we might see it with AI, oracles, something like that.
These are important distinctions. As cool as smart contracts are, there's some very fundamental, important limitations. The Oracle problem is certainly one of them. Smart contracts have no idea of what's happening in the real world. Thus, there needs to be some mechanism to make that happen. And hopefully, it's not gameable. A lot of work has been gone into creating different oracles. But when you hear that word, it's really talking about that interface of real world and the smart contract. Dustin or Cheyenne, curious to hear from both of you respectively. What are some other sort of important fundamental limitations of smart contracts that you often think of, that pop up that maybe most people aren't even aware of?
Actually it's really like you mentioned oracles, and that's like one of the big things that smart contracts and blockchain are closed systems, and how you interact with the outside world is kind of still Oracle problems still exist. It's like much better than a few years ago, but still exist by distributing your trust. But another thing I've noticed is like, especially early on, but still I see that especially in academia working on smart contract ideas, that they assume things can just happen and smart contract can do things. Even like in the regard of insurance, like they're like, oh, there's a storm somewhere, and then suddenly this happens. And it's not true, because someone needs to call that function, call that a smart contract, pay something that is called gas, which is the fee for processing that to the smart contract, and run it. So the fact that like it's smart doesn't mean it can do things by itself. Sometimes I try to like say like smartness of the smart contract are similar to smart fridges, as like they have a screen, but they can't really buy you. They can't really do that much until you actually pay to buy things. So that's one of the things I've seen a lot as like things automatically happen. It's not true. There are like some methods, like we have Gelato network and other things that can call the functions, but you still need to program that beforehand, pay for it so it can call and automatically run. But yes, smart contract needs to be executed to do something. They can't just do.
That's a great analogy. I love it.
I think one thing that we're coming back to, and a point that we're getting back to a lot, is that, like, you know, because of the term smart contracts, we keep thinking that they're smart and they're going to fix everything by themselves. One interesting thing is that, like, it actually was coined by Nick Szabo, who's actually more of a Bitcoiner, and Vitalik was actually saying that he's regretted, like, adopting the term because there's so many misnomers about how smart the contracts are. As to another weak point about it is that, like, you know, the smart contract should solve everything, but one of the things is that if there are bugs in the smart contract, then there are all kinds of, like, you know, situations where the funds might be locked, or they might be stuck, they might not behave as intended, and then you've got to resolve it another way. Sometimes with legal contracts, whenever that happens, they go to court and then they sue each other. But then with smart contracts, sometimes the funds get stuck and everyone doesn't get the money out unless something happens to fix that.
Yeah.
And we're seeing like people are going to courts for that specific thing again.
Yeah. Bugs are everywhere. Bugs are in your normal apps, so they're certainly in the other one. I mean, on that, I think a really interesting example of the Oracle problem is I kept hearing early on in crypto, and I'm sure people are still trying to use it. Like, okay, we're gonna put land deeds on the blockchain. So, you know, there's many places around the world in which it's tough to trust their local governments to actually like maintain these records in a safe way. So like, okay, we're going to put it on this immutable ledger. That way we can all see who owns what land. But the problem is garbage in, garbage out. It's one thing to the system of setting this up is almost trivial to say, okay, you know, it's basically just an NFT. An NFT would be a deed to your house. That's something we have already. But who gets to write the first set of data? And who gets to then kind of manage that going forward? You know, we found a new island who has that. So it's interesting that such a simple concept and such simple code that is already exists is there. We can do these things, but the problem is we can't do them because we can't get the trusted data to actually make them make sense.
The devil's in the details.
Yeah,
I think it gets back to the problem of the squishy humans. And sometimes smart contracts can solve some things, but they can't solve squishy human things. Like there are use cases, for example, with carbon credits. But sometimes the same, you know, plot of land for carbon sequestration is being sold on multiple platforms or being, you know, minted on a platform multiple times. So it doesn't solve the squishy human problem. It solves the executability of the code and doing what it's programmed to do.
Danielle, I imagine at names, you probably run into occasional situations where maybe outsiders that maybe are people from the traditional insurance space who aren't as familiar with crypto. Maybe they have misconceptions, or do you run into cases where there's kind of a learning curve? And maybe on a related note, you know, like what's the most common use case you hear of that actually can't be done in smart contracts?
I just would have to go back to that, what we said, the real world data making its way on chain and how does it get there? You know, they also, I think also just the assumption that for some reason that like, I don't know, like banks and custodians have more controls in place than like our smart contracts would. Like I don't know, they just maybe don't understand that they can be fully permissioned in the way that we want. And like, we have such granularity. So like every role can have a different, you know, multisig threshold. So yeah, I think, you know, it's just really just challenging, you know, they live in this world, they live in this box. And so kind of bringing them into a new box and saying, no, actually we can do these things. And then, yeah, like we said, piping that data back in and saying, okay, this is how we're going to handle claims, or, you know, this is how we're going to handle disputes, you know, just making sure it's all agreed upon ahead of time. And yeah, it's easy for us because like we are fully regulated. We have master services agreements, participation agreements. We have so many off-chain contracts as well that help us run our business. So that's what
you guys have certainly done the work in terms of really making sure that all that stuff is covered, as opposed to like some DAOs or DeFi projects, and it's very much just in the on the blockchain.
Yeah,
I hadn't really thought of that. You know, a lot of people certainly have misconceptions about smart contracts, but yes, they very much have misconceptions about how these businesses and organizations work as well. Like the concept of what's going on behind the doors of a bank I'm sure are completely wrong based on what actually is happening, and differs wildly across the industry. So
Yeah.
that's
And yeah, I was
a
just
good
thinking,
point.
it's kind of funny. Our smart contract prompts them to sign a tangible contract as well before it lets them move on to different steps. So we're layering in there.
It's like contract inception. That's awesome.
Yeah.
Let's kind of touch on one of the kind of superpowers, I think, of smart contracts. And Danielle, you just alluded to this, but that's really the transparency aspect of it. This is actually something near and dear to my own heart. Doing tokenomics, tokenomics workstream leader at Shapeshift DAO. One of the most powerful things, I think, for smart contracts is we can tell anybody and show anybody, and really anybody can look at any time, the exact state of the DAO's finances. And when I say that the DAO has, say $1.1 million worth of stable coins in its treasury, you don't have to trust me. Maybe you do if you think I'm cool or we're friends or something, but no, you shouldn't trust me. You should trust the blockchain. I can point you to a very specific address, like on Etherscan, and maybe other addresses that the DAO controls, and you can verify for yourself. And this is one of the beautiful aspects of this technology, and it's just very very powerful. Does anybody else have any good examples of leveraging transparency in this context?
Yeah, one of the things, it's actually one of my friends, Tarun Chitra, said on one of his talks years ago, and I keep going back to it. They're more on the DeFi side, more on the Wall Street on chain side. But it was interesting that they're saying, especially with DeFi mistakes, hacks, or rug pulls, everything that's happening, they were saying that we are doing the same mistakes as Wall Street, but 1,000 times faster. And one of the main reasons for that is right now we just learned that let's say JP Morgan emails from 3 years, 5 years ago for 3 years are missing. So no one really knows what happened there. We still have to investigate. A lot of things on financial crime, we've seen that it's a decade after, a long time after. And that comes with some whistleblower, something leaks, something happens. With transparency on chain, the thing I love is if a hack happens, if something happens within minutes, sometimes seconds, someone on Twitter are talking about it, a bunch of people are jumping on a call. Within a day, we have reports of someone that is a 16-year-old kid from some random countries, writing a whole report of what happened here. And within a few days, we learned, the whole industry learned what happened there. And this is something so valuable that I don't think not that many people even understand that till they in that space and they're trying to figure out what happened. And they're wait a minute, I can click on this thing and tenderly simulate the whole transaction and see which line of code did what and who called it. This is something that you can hear in my voice, excites me. So it's something that I really appreciate and I love to see more in the space.
Well, to that point, traditional insurers, they always say, well, we can't cover digital assets because we don't have enough data to know what happened or to know how many hacks there have been or to know what the losses have been. I'm no, we have data coming out of our ears. We can track it. We know what happened. We know how much was taken. And so I think that's what it gets me really excited. The same amount as you is that we have access to the data. Now, yes, we need to process it and make our assumptions from it. But it does make it slightly easier to be able to go back and look at that historical information.
Or as an example is most of the companies for transparency, they have quarterly based financial statements. And I love how MakerDAO a few years ago kind of made a joke as here's our real-time financial statement.
Every
and here's an updated one. Here's an updated one. Yeah, exactly. A whole system.
Yeah.
To Cheyenne's point, if you want to look for examples of maybe hacks or something like that, where someone has done a complete analysis, the people to look for, Taylor Monahan, otherwise known as Tevano _ on Twitter, and Zach XPT. And basically, these are people that whenever there's a big DeFi hack or anything going on, they'll be analyzing down to the wallet addresses. They'll be drawing charts of where the funds have moved. So we've got complete transparency over what is happening. You might not know who's behind the addresses, but then you can start, building up an idea based on how the information links from one address to another, where they're sending it to, what they're doing with it.
Yeah, this is a good segue into another important distinction to note with smart contracts. And another thing that we should touch on is what can go wrong. So we talked about, we've talked about the powerful use cases. I think we could probably come back to that too, because again, this is incredibly interesting and exciting, but there's limitations as well. Also, people in smart contract land can have a very bad day. So, we first saw this in, very extraordinary fashion, at least for everybody that was around back then with the DAO. Does somebody want to just like briefly kind of touch on what we're talking about, the OG original DAO, which kind of gave DAOs a bad name for a while, but what was that all about?
So this was very early on in the life cycle of Ethereum. Basically, the network had just launched, and someone had the idea, well, let's create this distributed autonomous organization, which was an exciting concept, and it was designed to be like a Kickstarter. And the whole point of it was, okay, we've got this new network. Let's make this Kickstarter-like project that can then help fund all these other projects we want to see, because they wanted to foster growth on Ethereum. We had this, super cool new smart contract platform that we wanted to build all these different programs on, but these different teams around the world needed funding to do it. Well, everyone just got, their ICO tokens given to them. Let's create this DAO, and the DAO was literally a smart contract that allowed you to, put funds in. It gave you this DAO token, and you kind of locked up your Ether in it. And then that Ether was then used to fund projects. So I could put in a proposal. You've probably heard the term proposal. I could put in a proposal and say, I'm going to go, print. It could even be something as simple as, I'm going to go print Ethereum t-shirts and funnel the money back to the DAO. That's, entering that squishy human era. Or it could be, I'm going to create a decentralized insurance platform using smart contracts, and a fraction of every percent coming in on that premium is going to go to all the DAO holders. So it was about, let's create these projects because it's good for the ecosystem, but also let's profit off these projects as a collective. So it had great hope. It's a great idea, but we were still learning about how to write secure smart contracts. And I would argue we still to this day are learning about how to write secure smart contracts. And the problem is everyone got a little too excited about this project. So it ended up that there was, if someone wants to correct me, I'm going to say at least 7% of all Ether, but it might have been closer to like 15% of all Ether.
I think it was 15.
Went in 15. Okay, 15% of all Ether in existence went into this smart contract within like a 7-day span. It was just like, it grew massively. Everyone was excited because again, it was one of the first things you can do with Ether, and the idea of it was to foster growth and profit off it. So everyone got really excited, and then it was hacked because someone figured out that you could actually use a contract to call the contract itself and kind of just iterate on that into a point. And without going too much deeper into it, the problem is the contract called itself and then decremented a balance. So there was a balance number, and in that smart contract it was saying, okay, and I used that money, so change the balance. But it changed the balance after it called. So it just kept calling and calling and calling, never changing the balance, allowing someone to just siphon a bunch of money out into a proposal that went to them. So this is an exciting project. Everyone got a little hyped up, maybe launched it too fast, but even if they had done more review, it was such a new concept because we were still learning about the intricacies of immutable contracts, of that EVM, all these things kind of coming together in the perfect storm, yada, yada, yada. An aggressive amount of money was stolen, to the point that they had to fork the network and basically undo everything that took place.
It was a mess, and
much
everybody became very familiar with the term re-entrancy bug.
The interesting thing is, back to that transparency and that internet sleuthing, everything relating to those, including like the addresses, the Ethereum accounts used to interact with that system, and you kind of see like little tests happening, and trying to see like, will this work? Because their transactions are being broadcast, and they're seeing like, is this actually going to work? Am I going to steal 15% of the whole supply of Ether? So people then take those addresses and walk those back. Well, where did this Ethereum come from? Or where did this Ethereum go eventually? So back to that transparency, we saw this happen, and we get to see now, like, okay, can we do we one day see where these assets go, or see, you know, little traces of who could have done this?
And another thing that it allowed was the white hat hack that saved a lot of those money, that like they saw how the exploit is happening, reverse engineered that, and basically like ran the same thing and steal money for good, being kind of Robin Hood kind of thing. But also like one thing I want to say that you were mentioning was there's another thing we learned from the DAO is like, if you want to raise money or have something to raise money, put a cap on it. And that was not a problem really in the traditional investment or anything. But here we saw that like there is no way for you to limit your protocols like risk. Like they were hoping for a few millions, they got $150 million or like more $1 million, and they're like, whoa, like we can't really do anything about this if people send money. And I just want to explain that reentrancy that you mentioned on the DAO, because it's really interesting that at the end of the day, it was like two lines were like reversed. And it was basically like assuming, as it's a Kickstarter, similar to what Josh was saying, someone comes to a contract and says like, give me this much of the balance. But before updating your database, give me this much more of my balance. And then before updating my balance, give me like just pausing the contract on there and like recalling the same function, which was totally new. Like we never had similar things in any other systems, which is pretty cool to just analyze and see that happen. And now it's basically we have reentrancy guard, which is a common code that everyone uses on their smart contract.
Well, and what else it's done for the industry is created a ecosystem within the Ethereum community that is smart contract auditors. And, now it's very standard practice, get your smart contract audited. These can cost 20 to hundreds of thousands of dollars, depending on how many lines of code you have, how complex it is. And what I've also seen develop in this, smaller ecosystem is now this insurance piece. And so, we actually have our smart contract auditors also have an insurance arm that not only do they say, hey, look, we've reviewed these, we believe they're safe and tested, but they also give us an insurance policy that if we are hacked, because of something that they missed, well, then we can get covered because of it. And so we're seeing this, I would say in the last, like the few years before, it would just kind of be like, okay, you'd get one audit and then like you'd call it good and like you'd probably keep making changes or doing whatever. But now our incentives are aligned with our auditors to be able to say, okay, hey, we made this change. They go back and look at it again because they're also on the hook if something happens. So it's been really great for aligning incentives and the community to learn from our mistakes of the past.
Daniel, I'm really glad to hear about the incentive alignment on the insurance piece, because one of the things that, projects had previously done is that they set a bar from themselves. If we make changes past this amount, we need another audit. And because they have that in place, they would like do everything they can to keep under that threshold so they don't trigger an expensive audit. So I'm really glad to hear that.
And they're so expensive. So it is really hard for a project to just turn around every time they make a change and drop another 40 grand. So yeah, it's been so good for us for sure to be able to come to them and feel more on the same team rather than before you'd be like, well, just look at it, just do it in the 2 weeks. Don't add another week because that's going to cost me more,
So it names,
and what a horrible
very
metric, because we just said it's 2 lines that caused the loss of 15% of the Ethereum network. So It's like, what's the like, okay, if we write more than 3 lines.
Mm-hmm.
So Daniel, it names you guys, you have a very good awareness of what could go wrong, and you're really mitigating that risk and addressing it specifically with these audits that are these days, the fact that that's actually news to me. I didn't know that some auditors are actually backing their audits with insurance. That's really powerful.
Well, I'll shout them out. So it's QuantStamp, and then they have
Chain.
Sorry,
what's the second one?
Chain Proof is their insurance arm.
Oh, okay.
I believe also Uno Re is doing this. So UNO Re. RE. And so they're doing some audit, also giving out the insurance policies. So yeah, it's quite exciting.
That's
Dustin,
awesome.
you mentioned incentive alignment. That's one of the coolest things that comes about in crypto, just thanks to tokenomics or just these nice superpowers that blockchains give us. I'm curious, Dustin, from your perspective, what are you seeing in terms of like what's pushing the space forward in terms of like audits and security? Like what's the frontier? How are things kind of getting better or evolving? I know just compared to like a couple of years ago, for example, like audits are much more sophisticated now. What are you seeing evolve there?
I think that there's a lot more progress to do with like using like formal methods. So like, formally languages that can be formally verified. There are, bounty systems like Code for Arena, for example. And I think that it's a combination of things. More people are conscious about it. There's also the game theory of like, not having just one auditor. You should have multiple auditors. They should know that there are other auditors that exist, so that you don't want to be missing bugs that your competitor finds, for example. So there's a whole like a multi-layered way of thinking about this. One thing that maybe is slightly missing is that sometimes the code does what it needs to do, but the exploit comes from outside the system. For example, Mango Markets, where they took a flash loan and then they voted proposals that forgave them for for stealing money. So I think that it needs to be viewed from a very holistic view, where you're not only doing everything that you think that you're going to do with the code, but you've also got to think adversarially and figure out ways that you can exploit it. Even though the code is doing what you designed it to do, the behaviors behind it may be adversarial in being able to exploit things that are not code related, but are squishy human related.
Yeah, those bug bounty programs that you mentioned are really key, I think, as well. Immunify is one we're using, and it was actually a stipulation of our insurance policy that we had that at a certain percentage of the insurance policy. So that's kind of how we're seeing that market develop on how valuable it is to stop a hack. And so I think they're saying that it's about like 10% of what's in the contract is what you're trying to offer as your bug bounties, which is quite high. But hey, I would pay that any day than lose it all.
And what I really like about that is that there are auditors that have a reputation that they've gained over a period of years, but they don't have enough throughput to audit all the contracts in the world. So what happens with these like bug bounty platforms is that it allows auditors that are starting out to like prove their worth on a bug bounty, rather than having to develop a reputation. How much experience do you have? You're never going to have experience if everyone wants experience. So the idea that these platforms allow people to make their name, get on the leaderboard, and maybe get hired by an auditing platform, or build up such a name that they become a sought after person for audits themselves. It really helps build up the ecosystem of people that can do this.
Yeah, great point, Dustin. Let's it's time flies when you're having fun. We're already 49 minutes past the hour. I feel like we could go a whole nother hour, but alas, everybody has busy schedules. But let's kind of just bring it back home. Really quick though. I guess I want to end on just like a fun, positive note and get everybody's sort of take on like what's most exciting right now, different exciting use cases. Josh, I want to hear about gaming. I see your hat. It says Strux on it. I've had the fortune of learning a little bit about Strux, but Strux is a blockchain gaming thing. Briefly, what are you guys building, and why is it special because of smart contracts and blockchains?
So yeah, gaming in this space has been growing steadily, and the concept is primarily around ownership, letting people actually own these things that they work so hard to get in the game. So you play through a level, you get a sword, you actually own that sword, and that's kind of it opens up marketplaces for that sword, as well as even such crazier things as potentially insuring that sword. So the next time I go into battle, if my sword breaks, maybe that's going to be okay because I'm going to have names helping me to recover that sword. And that was kind of the first idea in gaming, in blockchain-based gaming. How can we help give ownership to assets? But what we're trying to do with Strux is actually give ownership of the entire experience. So it's not just about owning the sword in Strux. It's about everyone collectively owning the game and helping progress it forward. Because many gamers, if not every gamer, has that at least one game that they've loved, and you know, the producers just decided, well, it's not making us money anymore, shut down the servers. So what we're doing using this technology is creating a game that can't be shut down. And, you know, we're not trying to be crazy, you know, freedom fighters for this idea. We just don't want to have the power to destroy a community. And communities form around these games. And, you know, it means a lot to these people. So if we can create a game in which, as long as people are playing that game, the game continues, regardless of whether or not we're still working on it, regardless if we want it to exist, that's interesting for us. And that's what Strux is. Strux is a game that will continue as long as the community is playing it.
Awesome. Relevant trivia here, by the way. Part of the reason Ethereum exists is Vitalik, the creator of Ethereum, was a fan of World of Warcraft. I believe that was a game. And basically, he got rugged on one of his favorite items. The server just, or the developers arbitrarily took it away from him, and this pissed him off. And he thought, well, what if that couldn't be the case? What if you had ownership of something in perpetuity on the blockchain? And Strux is building exactly that. Winding up with use cases, Cheyenne, what is a cool, like, smart contract use case that excites you right now?
Except me right now, that's a hard question to answer, but like learning about these was like, one of them was basically AMMs, or automatic market makers, which, so I was like doing a lot of research on the market designs, and there was always like this order book as like someone maker and taker. There's always two parties to the trade, but these automatic market makers end up being, you trade with the smart contract and there is no one against that trade, which was almost impossible before. It's almost as like your on-chain hedge fund manager that just handles your money, which was like pretty exciting early on. And just want to add something, because we have it on our notes, and I'm more on the security guy. I love to just read hack stories, sci-fi or not. So one of them that I love is, I mean, I love it because, I know it's funny for me because I was not involved. I mean, money was not involved, but probably it's not as funny for a lot of people, was the Parity Multisig, which basically that's how we know about this. I think it was 2015 or 2016 around DEFCON 3, that someone on GitHub basically posted, someone called DevOps199 posted that like, oops, I accidentally killed it, and with the transaction hash. And everyone looking at it, it seems like the Parity wallet, which was a multi-sig wallet, a smart contract, had a library. There was an issue and someone basically killed that library. So the whole system came to a halt, and it couldn't work. So it sounds like a lot of these hacks, people are stealing money. Sometimes money gets stuck in a smart contract, which is a common issue. And it was a common issue. It's not that much now, and no one can touch it. This was like in hundreds of millions of dollars, I think. But the whole oops, I accidentally killed it was really a meme and a joke around. So one of the stories, I find it funny.
Yeah.
Someone forgot to remove the function that deleted the smart contract, or at least like disabled the smart contract. Someone just accidentally left in a piece of code that shouldn't have been there. And there was no authorization checks on that piece of code. If you wrote a transaction that called it, it just did what it was supposed to do. And what it was supposed to do was deleted.
Whoops.
And that money is still stuck in the smart contract. That's so funny.
Yeah.
I think one of the scariest things about that was that it was like one of the two major multi-sigs at the time. So like I almost feel like, you know, multi-sig adoption, possibly, you know, a lot of people just were really afraid of multi-sigs because of what happened there. And I think that, you know, if that had not happened, we might, a lot more smart contract wallets might be in play now versus like, you know, it's just starting to come into adoption with account abstraction. So I just wonder how far along we would be on smart contract wallets if the Parity hack had not happened.
Yeah. It's interesting because today Gnosis Safe is the most commonly used smart contract wallet, and it has, I believe it has billions it's securing right now. I think the nice thing is it's a little bit anti-fragile in the sense that every time something goes wrong, the industry learns a lot from it. Of course, at the same time, there's all these novel things being developed like flash loans, and those can introduce attacks and governance. But that's one of the challenges with the space, is you always have to stay abreast of what's happening, the latest and greatest. We're at about time here. Miss Danielle, I want to give you the last word. Whether it's, I guess, ending on an optimistic note, what is a different, maybe like a non-insurance use case that excites you, or what just generally excites you about this space as you kind of look into the near to intermediate term future?
Yeah, so I recently was trying to consolidate some of my student loans, some of my debt in the traditional world. And I was like, oh gosh, I'm like older now. I have a better credit score. I have a higher salary. Like this is about to be, what I need. And they came back to me and said, oh, they could give me a loan for 14.99% interest. And I was just like, like, what? Like, that doesn't even come, that's not helping me. So the one that I want to highlight is Liquidity. And so that is a way that you can actually, use your self-collateralized 0% interest loans. And so I would be able to, not be able to use my crypto as collateral for, say, a traditional loan from a bank. And even if I would, apparently they would still rob me blind with those interest rates. And so instead, I'm looking into right now how I can finance, a real land purchase and also consolidating my student loans just by putting up my own Ethereum as collateral. And then obviously, have it be extra collateralized so I can always keep an eye on it and make sure it doesn't drop below that equilibrium level. But then what you get out on the other side is called LUSD. And so it's a stable coin that then I could go, get into the traditional fiat world and use those dollars. And then, there's no monthly payments, there's no interest, there's no anything. It's just making sure you're keeping an eye on that collateral. And then, eventually there's potential that the collateral will, goes up so much in value that I just can kind of pay it off with a small amount. And, I didn't really have to sell off my Ethereum that I've worked so hard to get. So I think that's a great use case. I think that people being able to access that for like micro loans, even, especially in, or being able to give those micro loans out, especially in different economies where the dollar might go a bit further than it does now here in the States. So yeah, I think just access to those financial tools that a lot of us didn't have access to before. I think that's what drives me. That's what gets me out of bed, giving us access to this global economy in a global world. And it's so cool that Ethereum, smart contracts, all of that gives us access to that.
Well said. Decentralized stablecoins have been a tough nut to crack, but Liquidity is doing a great job. And kind of finishing on the note of smart contracts, you can look at their smart contract and see that there's sufficient collateral in ETH backing the Liquidity stablecoin. Awesome. Thank you so much for joining us today, Danielle. If anybody wants to learn more about names, where should they go?
Names.com. We also have a podcast that I co-host called The Missing Link, where we talk to people in the industry and we're trying to figure out, what's missing to really get to crypto's mass adoption. So that's everywhere you can find podcast, and hit me up on Twitter.
Awesome. And that's NAYMS. Names.
And thank you. Yes. Which is a play because in Lloyd's of London, they call them names. So we took it for ourselves, NAYMS.com.
Ah, nice. A little insider insurance pun there. Cool. Well, awesome. Thanks to the whole crew today. Josh, Dustin, Cheyenne, you guys are awesome. And thank you everybody for watching. As a reminder, we are here at C4 to support you and your journey down the crypto rabbit hole. This is a non-hype environment. It's very authentic, genuine education designed for you to just explore this industry and maybe even work in it someday. So if you ever have questions or you want to get more involved, we're here to help. We'll end on that note. Everybody have a wonderful day. Take care.
Thank you.
Bye, all.
Take
Thanks.
care.